Welcome to Wealth, Words, and Wisdom, where real-life conversations lead to financial clarity. I'm Ashley Carter, alongside my co-host, Carrie Boatner. In this conversation-driven podcast, we talk about real-life topics like parenting, marriage, business, faith, and leadership, all things that naturally lead into deeper discussions about financial understanding, long-term planning, and wise stewardship. Get ready for some honest discussions about money, responsibility, and the choices that shape our future. Let's get into today's conversation. Entrepreneurs don't have income problems, they have cash flow problems. Today's episode is all about how infinite banking can become a secure financial source for entrepreneurs. So let's get into it, Carrie.
So the good news is, Ashley, you and I both have experience ourselves as being entrepreneurs. You've been an entrepreneur for many years in the health and wellness arena. And myself, I've been, involved in the aesthetics arena for quite some time as well. But you have some unique experience also because of your husband's business. And I think that this is one of those areas where this infinite banking possibility that people have, this tool that they have available to them, is something that can greatly impact him and his business, which also directly impacts you and your family.
Yes, absolutely. Some things that we deal with his business in particular that I'm sure a lot of other entrepreneurs feel or struggle with is irregular income. And we never really know how much he's going to make or when it's coming in. He doesn't have a set schedule. He doesn't have a set income or a particular paycheck that he's getting every week or every month. And he's got equipment that he has to buy and all these consumables that he has to invest in for his business to keep it going. He has to purchase his trailer and he has to have a reliable vehicle. And all of these things are very unpredictable with the money that's coming in, also the money that's going out. And having an infinite banking policy that can serve as a secure source of financial resources is very important.
So let's just kind of talk about what that looks like for you and your family, Ashley. I know that there have been times when, you and I have just been casually speaking, and Sam, he's a very reputable, highly respected man in his field, and he goes out and services his customers. And because he wants to continue to have that reputation, he shows up and oftentimes he provides the services for people, yet they don't pay. So that goes into the receivables that maybe he's not receiving. And so having that infinite banking policy, exactly how would you use that as a family and as a business owner for Sam? What would that look like? How exactly does that process work? When someone has an infinite banking policy, how do they actually utilize it? How do you go in and tap into the money that you've already set aside? How do you actually use that?
So if you're sitting here waiting on a big chunk of money to come in, like we've waited sometimes 4 or 6 weeks for a large check to come in for work he's already done, and he may be needing to make a large purchase for his business, we can access the cash value in our policy and we can borrow against that cash value, have access to that money immediately to go purchase the things that he needs for his business. And then we can have what he needs, do the work that he needs to get done. And when that big check comes in, we can turn around and put that back into the policy to pay the loan back that we have taken.
Just for our listeners, in case they missed the episode where we actually went into great detail about this cash value life policy, which we're also calling infinite banking. Ashley, why don't you just give me like some bullet points? What are some of the benefits of what this actually means for people? Because they may not have heard our episode on the cash value life policy.
That's a great point, Carrie. We like to call this starting your own bank. And this is where you're going to start this very individualized policy that is specific to you. And we're going to be putting money into our personal bank every
Mhm.
single month. This money is going to be growing with uninterrupted compound interest. The average growth is 4 to 6%. And we're able to use this policy as a bank where we borrow money and pay money back. In addition, there is this great death benefit that's attached to this policy. And while you did mention in our episode on infinite banking that we don't use these policies specifically for the death benefit, it's just an added bonus. We're using these accounts more like a bank. And the compound interest and dividends that grow on the money in our accounts is tax free. So we're not having to pay tax on any of that growth. Also, when we access the money, we're able to do that tax free. So instead of having to go to a traditional bank and say, hey, I'm needing to borrow some money because I'm waiting on this big check to come in, but I've got to have money now. I need to borrow some from you. Instead of having to borrow that money from a traditional bank, having to fill out all the paperwork, having to possibly get denied, and then having to pay back that loan plus pay back that interest, instead of having to do that, I'm able to access the cash value in my own account and avoid that traditional bank scenario. And then when I'm able to receive that money that's coming in that I'm expecting from the client, I'm able to pay myself back, essentially recycling my money
Uh-huh.
and using it
Yes.
over and over again.
I love that, Ashley, because as an entrepreneur, there are expenses that come up. Like you mentioned, you said unpredictable. And the other thing, too, not just the unpredictability portion of needing money as an entrepreneur. I mean, there are people who have that entrepreneurial spirit and maybe they're wanting to start a business and they would like to have money to secure a location or to hire some staff to do marketing, to supply all of the furniture and all of those things, whatever that startup capital is for their business, if they had already established their own bank, they would be able to access that money like right now money. So they wouldn't have to, like you're mentioning, go to the bank, get approvals, do all of those things. It's almost like I like to say to my kids, it's better to have it and not need it than need it and not have it. We talk about that when it's an umbrella or a jacket or something, just to be prepared for something. So I love that this isn't something just for someone who has a business currently, but maybe for someone who is thinking of starting a business and they've been saving their money in hopes that they would one day have enough to be able to start that business. We can help them get this established, get that money growing. The good news is when we help someone establish this account, owning their own bank, is that we're only helping them partner with companies that we know have a long standing reputation for excellence, for paying dividends over the last 100 years, even during the Great Depression. So we're only dealing with companies that are highly reputable. And guess what else? We don't charge people any fees to get those accounts established. And I love that. And helping people from any walk of life with any amount of money is a really beautiful thing. So, but again, of course, today we're talking about people with businesses and they're the ones who need to have access to that money because they're putting their neck out on the line to go after their dreams.
Yeah, that's right, Carrie. And you talking about someone wanting to start a business makes me think of the opportunity cost that we talk about a lot of times. We talked about if you have to go to a traditional bank and borrow money and then pay them back interest, you're losing a lot of opportunity money. Whereas if
Mhm.
you can put your money back into your own personal bank and recycle that money, then you have that money to use over and over again when other opportunities arise. So even if someone isn't actively already thinking about starting a business, maybe they're just living life and all of a sudden an amazing opportunity pops up
Mm.
and they have this money sitting here, and because they've recycled it and they have access to this money all over again, they're able to jump on these opportunities and possibly change their lives.
The other component to that, Ashley, of course, as we're talking about businesses, one of the things you mentioned is that businesses do have irregular income cycles. Now, I want you to imagine that your husband has his business and he needs money to purchase a new piece of equipment, and he goes to the bank and he borrows money from a traditional bank. They're going to put him on a payment schedule, and they're going to say, this is how much money you need to pay. This is when you need to pay it. Of course, we know there's interest and all of that stuff tacked onto it as well. But what happens when there's irregular income cycles and maybe the funds just aren't there and you don't have the money to make the payment? One of the great blessings and benefits of owning your own bank is, guess what? You get to decide when you pay that money back. You get to decide. So if there's a couple of those irregular income cycle months that you have where the funds are a little bit limited, I know myself, I experienced that in my own business. The good news is nobody's going to come and take your car. Nobody's going to come and take your piece of heavy equipment that you purchased to run your business. You get to make those payments when it fits your lifestyle, when it fits your schedule.
Yeah, Carrie, that's really amazing. And one of my favorite parts about owning our own bank and having these infinite banking policies is because, like you mentioned, if you can't pay it back, nobody's going to come after you and hound you for that money. And like we mentioned, that death benefit that we have attached to these policies, it's almost like having a safety net in case you can't pay that money back for some reason. So what happens is you have this death benefit, and if you're unable to pay the loan back, it just comes off of that death benefit at the end of your life, and the loan automatically gets repaid. And also, Carrie, we're mentioning going to traditional banks for these loans, but I know lots of business owners will end up having to use credit cards to purchase the things they need. And think how much interest is tied to credit cards. And if you don't pay it back at the end of the month, you're having to end up paying a lot more for the products you need for your business than what you originally intended on paying, which is really cutting into your profits.
And some of those interest rates, they're upwards of 21, 22, 23% interest. And that is something that can greatly prohibit someone from ever financially getting ahead. We're talking about different types of businesses. One business that just kind of jumps out to me is the real estate market. There are people that I know, some friends of my son, they have their own jobs, but as a side hustle, they're flipping properties. And I had a discussion with a wife because they are using their cash that they've had set aside to buy these homes and to buy all of the things necessary to put into these homes to then turn around and flip them. And just imagine how much value that would have sitting in an account, compounding uninterrupted interest. Even people who are building a home. I know people who are saving their money and then buying all the windows and then saving all their cash and then buying the roof. And I just think about, my gosh, like what would 4 to 6% of uninterrupted compound interest look like sitting in an account growing while they still use that money? Honestly, the opportunities are endless for what people are able to do using these types of accounts. It's just a matter of educating people and letting them know what's possible, because a lot of people just have never heard of anything like this. So it takes a little bit getting used to understand that it's even possible.
Okay, Carrie. So to really simplify this for people, because we are all about making sure that our clients and our listeners really understand all of these concepts really well so that they can make the best decisions for themselves and their families. So let's really simplify the example that you just gave. So someone is building a house, and instead of using their cash up and the cash being gone, like we've mentioned before, yes, they're going to have the doors, or yes, they're going to have the windows to show for that cash they've used. But instead of having that cash gone and only having the item to show for it, they could have put that money into their own bank.
Mm-hmm.
It could have been
Yes.
sitting over there in that account, growing at 4 to 6% uninterrupted compound interest.
Mm-hmm.
Then when they got ready to buy those windows. They could have borrowed the money against their policy, went and purchased the windows, but the difference is the money is staying in their account. Their balance stays what it was before they borrowed against it, and it's still growing at uninterrupted compound interest
Mhm.
while they're over here purchasing windows.
With the death benefit, also with a living benefit, and then paying it back whenever they want.
So, like we asked our listeners previously, would you rather just have the windows, or would you rather have the money you spent for the windows growing at 4 to 6% uninterrupted compound interest, plus the death benefit, plus the living benefits, plus the tax free growth? All of these extra things, would you rather have all of that or just have the windows? To me, it's a no brainer.
It is a no brainer. And I do want to say, Ashley, we're specifically talking about the infinite banking, but we do offer products for people that pay a much higher interest rate. The reason why we're talking about the infinite banking capacity is because we are specifically addressing the people in the population, people who want to have instant access to their money and they want it to be able to grow. And the beautiful thing about what we can provide people with is we're talking about 4 to 6% uninterrupted compound interest versus 0.039% in a traditional bank. And besides just the interest, we're also talking about the benefits, the life benefit, the death benefit, the tax-free growth on all of their money. Just making sure that people understand, we understand 4 to 6% isn't going to set the world on fire, but 4 to 6% compounded interest growing and growing and growing uninterrupted versus 0.039 on money that you end up spending and you never see again. You never have the ability to earn on your money. It's a dramatic difference in thinking in a completely different discipline. And it's what the wealthy people do.
That's right, Carrie. So let's think about if you had $10,000 sitting in a traditional bank account earning an average of 0.39% interest, that's $39. I mean,
Yeah,
that might buy you a meal at the Mexican restaurant, but it's not going to do more than that.
that's right.
But let's say you have that 10,000 growing at uninterrupted compound interest in an infinite banking account, it's going to grow up to around $600. That's a far cry from 39. And the
Yes.
joy of that is that 10,000 would then become 10,600. And then you're going to earn that 4 to 6% interest on the 10,600. That's what that compound interest means. And like we've mentioned before, that snowball effect, that money just keeps getting bigger and bigger and bigger and bigger. And the uninterrupted portion means that you're not pulling money out of that account and reducing the balance. The balance never goes down.
Mhm.
And that's the power of uninterrupted compound interest.
Ashley, we keep saying it, and I guess we keep saying it because I have to be honest and tell you that myself personally, I really had to hear some of these things several times. To be honest, actually, many times before I could truly understand and adopt the concept. So we do keep repeating ourselves, but just think about it too. When you earn that big whopping $39, from the 0.039%, the bank is going to send you a form that you have to submit for taxes, and you have to pay taxes on that $39 versus the $600 that you earn on the $10,000 in your infinite bank. You're not going to have to claim taxes on that money. The other thing that I want to bring up, Ashley, that I think is really important, especially for right now, today, for this time, I don't know where you're at, but we are doing this podcast in the end of February of 2026. And I know that a lot of people have already submitted their taxes. And what's going to happen right now is people are going to start getting their tax returns. They're going to start getting money that they have been living without anyway. And so, Ashley, I would like for you to paint a picture for people for what can this look like for a family or for just an individual who's now getting a tax refund. They've been living without that money anyway. What would be a wise thing for them to do with that money instead of getting it and go, I'm going to go spend it, at the mall and buy whatever. They're going to buy something that's not going to help them get ahead in life. It's not going to provide them any additional security moving forward. What would you say, Ashley, to the person who's maybe getting a tax refund for, let's say, $1,200 or $5,000. It really doesn't matter what the amount is. What would you recommend and what would that look like? How would someone go about setting up their own bank with us?
So I think it's important for our listeners to understand that with starting your own bank, you do have to put in a little bit of money every month to keep your account active or
That's
growing.
what you would do with a regular bank, right, Ashley?
Exactly. But the joy, Carrie, is that no amount is too small. I know you've mentioned before being able to help a mom who could only put in $100 a month.
Mhm.
And
Yeah.
that's actually what I've talked to my son about. We've talked about how he's working now, he's earning money. And I told him, I was like, okay, it's time for us to get your own bank opened. I think it
Mhm.
would be wise for you to start setting aside $100 a month. When you average it out, that's about $25 a week. That's a very good amount for you to start with. And think, Carrie, he's 12 years old. So
Right.
think with uninterrupted compound interest, what that's going to look like over the years for him. But
Mhm.
for the family you're talking about that has this income tax money coming in, what they should think about is what could that, say, $1,200 turn into for generations to come? You could take that $1,200, you could put it into your own personal bank. You could decide how much money per month that you can set aside to add to your account and still have access to that money along with all the other benefits we mentioned before. So instead of taking that 1200 and saying, "Oh, hey, there's something at the mall I've been wanting," or there's this PlayStation, or there's this game, or there's this piece of jewelry, or there's this whatever, something that is not in the grand scheme of life going to add any value to your life. It may add a little bit of short term joy,
Mhm.
but we want to teach our listeners how to focus on long term wealth and generational wealth. And that starts with making the simple decisions to be smarter with your money.
And the truth is they still get to get the PlayStation. They still get to get the thing at the mall. It's just one extra step. Instead of just dumping it into your traditional bank account, you're just putting it over here into your own bank and then you still have access to it. It's just one extra step.
Yeah, we're not saying do without. We're saying start this bank first before you use the money so that
Yes.
then that, say, $1,200 that we're using as an example, is over here growing with uninterrupted compound interest while you're over here enjoying the thing that you wanted to purchase. So instead of the
Mhm.
1200 just being gone on the item, it's still growing. The money is still growing while you're enjoying your item.
That's right. And bringing this back to how we started this podcast today, we're talking about businesses. And I guess the truth is, we talk about businesses. And of course, it always ends up that we're talking about personal matters too. Because if you own a business, you know that owning a business is an incredibly personal thing. And there's very blurred lines between owning a business and being an individual person. Things go between the business and your home all the time. And being able to have peace of mind when it comes to how you are managing the finances of your business directly impact the quality of the life you get to live personally. If you're stressed out about money at work, you're going to be stressed out at home. So, what we want to try to help people do is understand the tax advantages of owning your own bank, having the opportunity to be able to fund future growth for your business, whether that's continuing education, buying additional heavy equipment, hiring new staff, just any type of business expense that is going to happen, but then also protecting your assets. Many of the accounts have other types of protection features that are woven into that. And those are things that we go over when we do an illustration for you. There's emotional stability that comes with knowing that you're making a decision that's helping your business, but also protecting your family. Would you mind sharing with everyone what exactly happens when we get an illustration? How do we even go about getting one of those?
So, first and foremost, we want everyone to know that illustrations are completely free. So, an illustration is like a behind the scenes look at what an infinite banking policy could look like specifically for you and your family. These are
Mhm.
very personalized. And Carrie, your illustration is going to look totally different than my illustration. The amount of money that we're going to start our bank with, or the amount of money that we're going to add to our banks every month is going to be different. Our ages are different. And so every illustration is very specific to the client that we're talking to. And like I mentioned, it's free to the client for them to request that and be able to look at that illustration. We like to tell people, if this seems confusing at all, you're really going to understand it a lot better when you can see it on paper and you can
Mhm.
see how these numbers are growing over time, and you can see the snowball effect of what this looks like to be able to put this amount of money into an account and have it grow with uninterrupted compound interest, and how that this can positively affect and help your family for generations.
I love that. And one of the things that I've noticed, Ashley, with some of the clients that we've helped is that, when we do that first illustration, we're simply asking, what's your date of birth? What is your name? How much money would you like to start your bank with? Because even the traditional banks ask you, what's your initial deposit? And then how much money do you feel would be comfortable? We get that initial illustration. And oftentimes I've seen people who have looked at that, we go over the illustration with them line by line and explain all of the very specific details that are in it. And oftentimes we've had people, they see those numbers and they go, you know what? Go ahead and let's see what it looks like if you double the amount of money that I'm putting in there every month, because it doesn't matter. It's just a bank. And really, if you could just simplify it for yourself and just think, this is just a bank. The big difference is I'm going to leverage my money now instead of just using my money one time. And that word leverage, if you know anything about business, if you know anything about money, being able to use something in more than one way is where the real power is when it comes to your finances. I say it all the time, but Albert Einstein said that compound interest is the eighth wonder of the world. And it really is quite remarkable when you fully understand the power of it.
If you have money sitting in a traditional bank account or a traditional savings account and you pass away, not only is your family going to have to wait for all of that money to go through probate and pay taxes on that money that's in that account, with an infinite banking policy, they're able to receive that money tax free. And they're not having to wait to receive that money after going through probate.
Ashley, I love that you remembered to bring that up because it is an important factor. We hate that we have to go through those end of life scenarios, but they do happen. And we want to be prepared for whatever comes, and not having to pay taxes on something that one of your loved ones or you yourself have spent so much time, effort, and energy putting that money aside to help your family members. You don't want them to have to lose, 30 or 40% of that money just to the government.
Yeah. And this whole episode has been about businesses or starting your own business or entrepreneurs, but everything we do is for our families.
Yeah, it really is. And as entrepreneurs, Ashley, we build our businesses so that they can generate income. But if we don't build systems that are going to protect and multiply the income that we're making, it seems like we're always just starting over. And one of the great benefits of infinite banking, it allows entrepreneurs and individuals, but specifically entrepreneurs, to keep more of what they earn, to leverage that money. You can move faster on opportunities as they come up instead of thinking, that you have to go and borrow money from a traditional bank. That opportunity comes up, like you mentioned, Ashley, we are able to just say yes to it. We reduce our dependence on the traditional banks, waiting for them to say, yes, that's something that you can borrow money for, or no, you cannot. And at the same time, like the Rockefellers, like the wealthy, we are building generational stability by utilizing this incredible tool of having an infinite banking account.
That's right. So if you're listening and you're a business owner, or you want to become a business owner, you're an entrepreneur, and you would like to see how infinite banking could change your business, change your family's lives, how that having your own bank could work inside your financial strategies, then reach out to us. We will get a personalized illustration just for you. We will map out exactly how this strategy can benefit you, and you can contact us at wealthwordsandwisdompodcast@gmail.com.
Ashley and I want to thank you so much for listening to this podcast. If you feel that this podcast has been a blessing to you and there's information in here that you believe would benefit your friends or your family, please feel free to share it by going to wealthwordsandwisdom.com. We look forward to providing you with another episode next Tuesday at 6 a.m. Central Standard Time. Thank you for listening to Wealth, Words, and Wisdom. Our goal is simple. It's to help you approach your financial decisions with clarity, confidence, and with intention. Because we know that when wisdom leads the way, your money decisions will feel less overwhelming and they will be far more aligned with your real life. If something you heard today resonated with you and you'd like to explore your options, we offer complimentary strategy sessions. There's no pressure, there's no obligation, it's just education and clarity. You can reach out to us at wealthwordsandwisdompodcast@gmail.com. And be sure to subscribe to our YouTube channel. And if this episode was helpful, share it with friends or family who you believe could benefit from this conversation. Until next time, remember, wealth grows where wisdom leads.